Hi friend, welcome back to the channel. This is just a quick trade breakdown. It's a trade that happened today in PM session of NFP. Well, I did not trade it, but I tape rated. I kind of like manage the trade without actually being in trade. And we're just gonna break down the trade real quick, which is on E-mini S&P and PM session. This is a simple strategy that I usually used. I fairly use it most of the time, but it's a strategy that needs to be used with some, with care, because you need to understand price narrative, you need to understand price delivery before you use this kind of strategy, because sometimes it doesn't happen all the time, but most of the time when it does happen, it is pretty accurate and it gets to the point it delivers price really quickly and faster. Well, not faster, but it does deliver price as expected. So in this trade, this is today's PM session NFP. So what we're looking at is launch, New York launch between 12 to 130, the high and the low. And what I was looking for was to see if price trade if price trade anywhere between the high or the low of the launch session. Once it did that, it trade below that low, and I was monitoring because we have another lower low here, and which is kind of considered sell-side liquidity. And what I wanted to see is to see if price is going to take out the sell side as well, or is it just going to reject from this fair value gap that we're seeing here on the 2-minute fair value gap on a 2-minute time frame. And it did trade into this fair value gap, which on the 1 minute, that's where the fair value gap is at. And as we can see, price couldn't trade below through this fair value gap. And what other confirmation it gave me was we did have a fair value gap in here. It traded back to the 50% of fair value gap, dropped lower, wasn't able to close through this fair value gap, and then it shift in market structure, trade above this fair value gap once again. So if you were in a trade, if you were selling, and then you see this kind of stuff, it just means that you got to get out of the trade because it's shifting in structure, and because we have already take out the sell side of New York launch, we're probably going to go for the buy side, which is the New York launch high. And that's exactly what it did. It did shift in market structure, as I put the eyes in here, and then trade back into that fair value gap, which is at the moment that I was recording, that's when that was starting, because I knew that, okay, once it trade back into this fair value gap, that is a potential entry. And from this level, I'm going to target the high in here, this high and this high, those are level of liquidity. So usually price reside above this level, and that's where I'm going to bet in the market to get this is a direction that I would bet for price to go to. And it felt did exactly that. So as you can see here, it traded back into the fair value gap. I wanted to see some kind of reaction around this volume imbalance, which is right here. So price trade to the volume balance, and we can see that it reacted pretty aggressively from the volume balance, trade back into the fair value once again, and then started rallying higher. And as it rallies, I saw that, okay, there's a second volume imbalance that it traded to. It touched that volume imbalance, and I wanted to see how it reacts to it as well. Usually, volume imbalances are level of resistance as well. They do create some price fluctuation in the market. And if you look here, there's another fair value gap here, which can be considered as an inversion fair value gap, as a level of support, as we already traded through it once, and then through here it resisted, and now we traded through toward the buy side. So once we come into it once again, I'm expecting for price to run from this fair value gap in here to get to the next level of liquidity or zone of inefficiency, which is this imbalance right here. So that's what it did, as it traded back into that volume imbalance, that fair value gap, and then expanded higher. As you can see, this is actually live market. I was recording it live, and I was just kind of like reading price, like what is it doing next? Where is it going to? Based off the things that I've done, because pretty much this year I've spent a lot of time kind of like looking at market, managing trade on 1 minute time frame, etc. I have some familiarity with what price does to certain level, especially on those lower time frame. So I can kind of like anticipate that, okay, if it gets to this point, we're going to see some kind of like stalling, some retracement or something. That's not going to make me get out of my trade. I enter the trade here. This doesn't make me get out of the trade. This is not going to make me get out of the trade. This is a good confirmation for me to go higher. But you can see that, okay, as the trade goes on and it push high, you can see this kind of like deep retracement. If I did have an understanding of market, a deep understanding, or a good understanding of price narrative and higher time frame, I'll probably get out of this trade. But because I understand that, you know, price is fractal, sometimes things that happen on the lower time frame that are not comprehensible, that you cannot understand, you can go on the higher time frame to see what is happening there. Probably it's reacting to some of those levels, and in this case it is reacting to a 5-minute inverted fair value gap, just like the same thing that happened in the 2-minute. The same thing is happening here on the 5-minute. We have a fair value gap that it trade through. It trade back into it. It has become a zone of resistance or support that will give price support to get above this high, this one and this one, and it is what it did. So as you can see from that volume imbalance, that fair value gap, he accelerated to this high. He take out this high, then to get to that level. So by understanding how price book and deliver, you can basically manage trades like this, because this is kind of like, okay, you are sitting in the trade, it goes up, then come down, goes up, come down, goes down, come down. It's easy to get off the trade and leave money in the market, leave money in, or be scared, you know, as it does that, you get out and you don't know, right? So just managing the trade, getting it to the point, and as you can see, it delivers right there at 3:30. So the total of the trade, the total wait, the wait time of the complete trade was about 1 hour, and the analysis, everything that comes before that was like 1 to 2 hours of time, of your time that it takes you to manage a trade like that. And when I'm in a trade like this, I'm not doing anything. I try not to get distracted by my phone or talking, etc. No, I'm managing the trade because I know that there are levels of fluctuation. Some people, they like to just enter the trade, forget about it. But as I study price, I know that, okay, sometime, you know, like if I'm in a trade like this, I can enter, it's a good entry, and it can reverse. Let's say I take this trade here from this entry because I saw the volume imbalance, and I was aiming for here, for this sell side in here. Start trading lower, and once it came to this level, I'm doing something else. I have my stop loss above this level, and I want to get to take profit here. I'm being distracted. I leave it on my phone. That's gonna be a loss, right? However, if I'm managing it, I know that, okay, this is a fair value gap. It's gonna come here. That's the sell side that it has already taken. Does it shift in market structure? Oh, it does. Let me close this trade because it might shift and goes higher. So just understanding price this way kind of like give me more confidence in being in trades, closing, and then kind of like protecting my profit and capital, etc. So that's just trades that I was managing today, and I would just wanted to share it with you guys. It's a strategy that I use. You know, it's a fairly good strategy. Just understanding how to use New York launch session and to use it to find trade in the PM session. They don't work all the time, but they work based off higher time frame analysis. If your bias is bullish, you will look for the rate of the sell side and aim for the buy side. And if it's the opposite, you will look for the rate of the buy side first, then you aim for the sell side. That was pretty much today's PM session. And yeah, that's the video. That's a breakdown. I hope you guys enjoyed. If you like it, leave a comment, subscribe to the channel. I'm trying to get to 100 subs on this channel. So if you guys can help me, that will be much appreciated. And until next time, my friend, peace and safe trading.